Okay, now that was quite the start to the week. Grain futures started the session under pressure, but all the selling was gone from the markets by the time they closed this afternoon. So the grains finished sharply higher. Cattle complex mostly lower, and lean hog futures also starting the week under pressure.
Live from a starchy start to the week via Farm Journal broadcast, this is AgriTalk. This afternoon, it's a conversation with Angie Setzer from Consus, and later Cary Artac from ArtacAdvisory.com. Directly following the news, Jack Scoville from the Price Futures Group. I'm the handsome newsman Davis Michelson, and now the host of AgriTalk, Chip Flory.
All right, Davis. Hey, welcome to AgriTalk. Glad that you were with us on this Monday afternoon.
Mm-hmm.
Wow, dude. What a way to start the week.
Yeah.
Oh, man. The sellers were there to begin with. Mm-hmm. At the start of the overnight session, the sellers were fairly active in the market, and there was at least some modestly lower trade happening in the grain markets. But by the time we were done this afternoon, the markets were all sharply higher. So we'll find out from Jack what's going on, what he thinks. And then Angie Setzer, Consus Ag Consulting, back on AgriTalk here this afternoon. I'm looking forward to the conversation with Angie. Yeah. Speaking of conversations that I am looking forward to, you're putting some conversations on video that are going to be very enlightening and very entertaining, I do believe.
Well, that is the aspiration for the Grow Getters podcast. Learn a little something and have a darn good time doing it. The first one drops tomorrow. Big day. I'm really excited about it. I honestly have no idea how well received this is going to be or not, but I've got a production squad. We have put an awful lot of time and effort into getting this up and off the ground and are very excited about it. I hope people will tune in and check out a couple, at least. Give us a look. Grow Getters podcast drops tomorrow on YouTube and really anywhere you get your favorite podcasts.
Right.
Yeah.
Is Flyover Whiskey your first one?
Flyover Whiskey's coming in on our second installment. We've got the Painter Sisters from Painterland Farms in the rolling hills of Tioga County, Pennsylvania.
Nice.
It's a lovely program. We're very proud of our work, and I really hope people like it and learn a little something. Again, and I mentioned it on Friday, but one of the great things that just sort of keeps coming up organically in the conversations. Let's bridge that gap between urban and rural. Let's tell people where their food comes from. It's just taking on a life of its own. I'm super psyched.
Very good. Very good. I can't wait. Indeed. Cannot wait to see the first one. All right. For now, let's get to the markets. What do you got?
Well, Chip, wheat futures were a willing participant in general grain rally, with winter wheat futures leading the way to the upside. July hard red winter wheat futures opened lower, spiked support at Friday's low, then rallied to close well above Friday's high. The upside reversal in HRW futures builds upside price momentum, with the weather forecast calling for generally dry conditions in western production areas. July soft red futures also closed well above last week's high to generate upside momentum. Dry and cooler than normal conditions in Russia's southern production areas added support to today's prices. Export inspections of wheat week ended May 2nd, just over 321,000 metric tons, and that was near the bottom of trade expectations. Nonetheless, July hard red winter wheat futures were 25 cents higher today, $6.75 1/4. July SOW wheat up 26 1/4, $6.48 3/4. July spring wheat closed at $7.25 1/2. That's up 11 today.
Momentum built in that market as it was crossing over resistance levels. Yep. You could see it, and it was an impressive move in the wheat market today.
Export inspections of corn week ended May 2nd totaled 1.286 million metric tons. That was at the top end of trade expectations. With export inspections running nearly 33% ahead of year ago, some traders are looking for a slight increase in the old crop corn export estimate in Friday's supply and demand report. The forecast for more rain in the Midwest this week and increased risk of planting delays also encouraged short covering in corn futures. July corn opened slightly lower, spiked support at Friday's low, then rallied to close above Friday's high to complete an upside reversal and to close at the highest level since January 25th. July corn futures 8 3/4 higher, $4.69. September corn up 7 1/2 cents to 4.76 3/4. December corn futures closed at 4.88 1/2. That's up 5 3/4.
First week of May, and we've got rain in the forecast. That can be double-edged sword for these markets. Yes, the potential for planting delays, but this rain's going to do us some good later.
Export inspections of soybeans in the weekend of May 2nd totaled nearly 349,000 metric tons, in line with trade expectations. July soybean futures opened slightly lower and traded lower in the overnight session, then rallied to close sharply higher and above resistance at the March 21 high and the highest level since January 24. Flooding in Rio Grande do Sul, Brazil, and the threat of planting delays in the United States triggered aggressive short covering today. July beans 33 3/4 cents higher, 12.48 3/4. August beans up 30 1/2, 12.46. November beans closed at 12.19 3/4. That's up 18 3/4 cents, Chip.
The old crop really stretched the gains out over the new crop there. We're going to have to talk to Angie about that and see if there's anything behind that spread action in the bean market today.
July cotton today was a whole penny lower, 77.06. On your livestocks, a $3.87 rally in heavyweight choice graded boxes this morning helped front month live cattle close higher. June fats 30 cents higher, 176.97 1/2. The August feeders 187 1/2 lower, Chip, at 252.87 1/2. June lean hog futures gapped lower, firm to fill the gap, then drifted downward to a low range close. June hogs today 77 1/2 lower, 98.17 to start the week, Chip.
All right, thank you very much, Davis. Let's bring in Jack Scoville, Price Futures Group. Hey, Jack, how you doing, buddy?
I'm having a great day. What about you?
Well, yeah, it started off really, really good here for the week. What do you make of it?
Well, a couple of things. First of all, there is some pretty extreme weather conditions being reported around the globe for soybeans and mostly soybeans, also a little bit of corn. What's going on down in South America, important. And the wheat market's still affected by what's going on with the Russian crop. And then looks like we've triggered some moving averages and some short covering by the funds to really push on this thing. And I think it was kind of fun buying, fun short covering that really lifted the nearby months to their highs. Yeah. And we probably, given the amount of fun short that's in there, we probably got a lot more to go.
Right, right. You know, it's that time of the year, isn't it, Jack, where if this thing builds on itself, like you said, there could be a long ways to go. But at the same time, it's that time of the year. A failed rally after the way that we started today would be kind of devastating by the end of the week, wouldn't it?
Oh, yeah, absolutely. You got to hope it keeps going because if we fail now, it's not going to look good for the rest of the summer. And speaking as a broker, I could use a pretty good summer around here. So I'm looking for it to continue.
I love it. I love it. Let's keep the volatility high. Let's keep some strength in the markets, and let's keep Jack happy, everybody. Let's do that. Jack, good stuff, my friend.
Especially that.
You bet. You bet. Thank you so much. Jack Scoville, Price Futures Group. Okay, coming up next, Angie Setzer, Consus Ag Consulting. We've got the weather to talk about. We've got fund positioning to talk about. We've got weather around the globe to talk about. We've got those spreads and the beans to talk about. Most importantly, what was today built on? We'll find out from Angie next.
We don't make the news, we render it. AgriTalk.
Say, Chip.
Davis.
I have something to report on AgriTalk.
Okay.
Everyone has joined us, and that makes me very happy. That pleases me. Thanks for joining us, everyone who's listening out there. I tried something new, and I wanted everyone to make sure and update their scorecards. I tried anchovies on pizza for the first time this weekend.
Okay. How did that go?
I don't know.
It
was very pungent. The first two pieces were okay.
Yeah.
By the third one, I found myself picking them off. And then just before the show for lunch today, I made a pizza salad. You heat up a piece of pizza, cut it up into chunks, put it on lettuce. It's health food now.
Yeah, right.
I picked them off then, too. I
Did you really?
I don't like anchovies. Yeah. I mean, the rest of the pizza's fine. You just pick them off.
You had quite the culinary adventure this week.
Oh, I tried a whole new barbecue joint, too.
Yeah.
Woo! There's a new fave in town, baby.
New fave in town on the barbecue joint. Anchovies on pizza.
Mm-hmm.
I'm telling you, this Southern life is looking good on you, dude.
I need to spend some time on my bicycle this week and erase the damage.
All right. Like David said, welcome back to AgriTalk. Glad that you're joining us. Angie Setzer, Consus Ag Consulting, is our guest analyst today. Angie, it is great to talk with you again. How are you?
I am great, just being taken back to my days of working at the pizza place in college and those people ordering anchovies and me cursing them.
Not for you? No? Okay.
It was, yeah. So congratulations to you for trying them.
Absolutely. See, they're delicious. They're delicious on pizza. They're better in a salad. You know, I'll admit that. But
I'll let you and Carl agree on that one. He's okay. He likes small canned fish too. So you guys can start a club.
And I've really tried those too. Yeah.
I'm guessing that Carl and me on the porch with a can of sardines and a sleeve of saltine crackers and a couple of bourbons would look pretty dang good.
I have a feeling it would be a good fit. Yes.
Yeah.
I got a suggestion.
I'll let you two have that.
And while they're doing that, let's go make marguritas and have some nachos. Huh?
That sounds good to me. Way better. Way better.
All right.
Sign me up.
That's awesome. That's awesome. All right, let's get to it.
Yes.
What are you thinking? What a way to start the week, Angie.
I'm ready to party, man. I've been waiting for this for a while now. I mean, we usually get a bounce right after harvest. We didn't get that. And so we've been waiting for a while just to see this opportunity. And so, yeah, I thought I was depressed. You know what I mean? It turned out I just needed the markets to not stink. And so here we are.
Yeah. Today was more than not stink. Today was pretty doggone good. It's the kind of a day that can lead to something much bigger. It's also the kind of a day that sets you up for failure at some point. And I'm not convinced which one it might be. I want to believe that it's setting us up for some more short covering in here.
Yeah. And I think we are. I think that it would make sense if I were someone that was looking over the balance sheets currently, and I'm not. I mean, I am, but I'm not someone that's managing hedge funds worth billions of dollars. But if I were, I mean, I would look at the risk and recognize the fact that we've probably pushed it a little too far. You know, you've seen the Argentina crop reduced pretty substantially from what we were talking about. I'm thinking corn specifically right now. Like, you look at crop size around the world and you've seen some pretty significant reductions in the supply, the supply outlook. You know, the U.S. still has a lot of available supply that's relatively cheap going into the world market and is super competitive. And we're going into a growing season, you know, with a whole lot of questions about what weather will look like and things like that. And so, yeah, if I were someone managing a hedge fund at this point, I would probably go ahead and pull my arms and legs inside the vehicle. And I think that's why you saw too, you know, I think we saw a bit of an increase in open interest with last Thursday's rally. And I think that was kind of like a warning shot from your traditional players in the grain market, where it's like, okay, we're coming in long because this market setup says you should be, and you guys have one day to really kind of get your affairs in order. And then, you know, today was a day where you did see that short covering happen.
Right. You know, the old timers in the market like me would look at what's happening in the soy complex and say, finally, we got meal leading the way in this market with a rally. I'm not sure that there's any chart that looks as impressive as that meal chart looks right now.
And meal has a story, you know, so if you look at it, where I think the significant issues that you've got going on in beans are pretty much South American centric right now. And so Argentina, you've got Argentina, what, 80% of their employments, or 80% of their citizens are part of a union or something like that. I mean, it's a pretty substantial amount of folks. in Argentina that are unionized. And so right now what you're seeing there is a rolling strike. So it's not really an indefinite strike from one group that's causing issues. Like today, it's the freight group. So it's, folks in the rail industry or the ports. Last week, it was oilseed workers. Next week, it's another group. And so, you're seeing some disruptions to the ability to produce. You're seeing a slower movement to the pipeline than what traders were anticipating. And, one of the things I wrote about a month or so ago was how sometimes the balance sheet and the physical supply pipeline don't match up. And that creates really interesting moves in the market. And I think that's what you're seeing right now is like we have a balance sheet. We have an understanding of what should be taking place, eventually when we get to the end of a crop year. But how we get there is never really clean. It's like making bologna or something like that. Like it takes a lot of effort and a lot of really gross parts to kind of get to the end. But that's what we're dealing with right now with Argentina. You've got Rio Grande do Sul with the potential of 3 million metric tons or so of beans lost there. They're Brazil's second largest producing state and their third largest crusher. And so with crush margins as poor as what they were, with oil falling off, with issues kind of coming in with production, the U.S. is not being encouraged to run. You have to have meal rally to carry the weight. We have that meal demand, we have that need for meal, and we're kind of a little short, or at least the perception is we're a little short in the pipeline as we move ahead. And so that's really what's driving this. And, I'm ready to rock and roll right along with it.
Okay. So the South American problems, does that explain the spread action that we saw in the bean market today?
I think the realization is there that the U.S. could start to get some business. If you see to where we do have Brazil's basis continue to rise, and you see where the Argentina farmer isn't turning a lot of bushels into cash, or at the very least, it isn't moving into the export market, I think you see folks come back to the U.S. We have the most storable supplies. So from a reserve standpoint, the U.S. could continue to get some business. And so folks had kind of written off the bean export program. To me, the spread action says that there may be something happening there. The U.S. is the best quality supplier who's able to drop everything and ship you a load of beans tomorrow without an issue. And so that has some value.
Okay. You asked, okay, great summary of what's going on in the markets right now. Earlier today on X, you asked, what do we need to talk about? And Grain Monster came with a response right away. I don't know if he was kidding or if he was serious with his question of what he wants us to talk about, but I think it's a dang interesting topic. He says, give me some reasons why perma bears and perma bulls never change their mind.
I don't know. I know as a risk manager, and I find myself like and I'll say this even after the run up from 21 or 20 into 21 and 22 and all of that, and I said it before that took place, and we had a lot of cheap contracts. 20 was the worst year of my career by far, and I hope that I can say that for the rest of my life for sure. Just because we had a lot of low price contracts when the market started to shoot higher. And I still said at that point, like it's not having lower price contracts when the market's higher that's hard. It's having the opportunity to sell higher, not selling it, and then trying to figure out what to do when the market is lower. And so as a risk manager, you're constantly afraid that tomorrow's the day the shoe's going to drop, and you're going to spend the next 6 months trying to console all of the growers that you work with who are trying to put together a marketing plan in a less than profitable market. So I think there's a reason that sometimes you see some folks be described as perma bears, and that's simply because their job is to make sure that folks are selling when the market is rallying, they're scale selling, they're incrementally selling. And so sometimes I think they get a bad rap. The perma bull side, everyone wants a bull market. Everyone wants higher prices. Everyone thinks that the market's going to continue to run, and when it does, it's fun. And so I think that's just a natural tendency in this industry to want prices to move higher. I think it's just the hardest part of the job is to make sure that you're trying to constantly ask yourself if you're leaning too hard in one direction or not, and if the information's telling you to do something different than what you're doing.
Excellent. Okay, which brings us to the question that we're going to talk about when we come back after this break. Is we had that nice rally in beans today. There might be some old crop marketings left out there. But if you've been waiting for a rally, what makes you work up the guts to go ahead and sell into a 30-cent rally like we saw today.
Let's go to the markets page at profarmer.com and check today's closes, where July HRW wheat futures were 25 cents higher at 675 and a quarter. July SRW wheat up 26 and 1/4 cents to 648 and 3/4. July corn futures 8 3/4 cents higher at 469. December corn futures closed at 488 and 1/2. That's up 5 3/4 cents. July soybean futures 33 3/4 cents higher at 1248 3/4. November beans closed at 1219 3/4. That's up 18 3/4 cents. July cotton today a penny lower, 77.06. On your livestocks, June fat cattle 30 cents higher, 176.97 and 1/2. August feeder futures $1.87 and 1/2 lower at 252.87 and 1/2. June lean hog futures today 77 and 1/2 cents lower at 98.17. Get more. Visit tryprofarmer.com.
Opinions expressed on AgriTalk do not necessarily reflect the views of Farm Journal Broadcasting, affiliate stations, or sponsors. The best talkers in ag, including you. Join the conversation on AgriTalk. Call us at 855-4TALK-AG.
Welcome back to AgriTalk. I'm Chip. Glad you're with us. Monday afternoon, and our guest analyst is Angie Setzer with Consus Ag Consulting. Okay, Angie, let's go back to where we were at the end of the last segment. We got a nice rally today. It's a rally that a lot of guys have probably been waiting for. When you look at that bean market, well, when you look at the corn market, too, gotten back up to some levels that guys have been waiting for. Now that it's happened, how do you work up the guts to go ahead and pull trigger on some old crop catch-up sales?
Well, I think the biggest thing is to take into consideration, how far we've come from where we were and how it felt to be where we were when we were there. It was 3 months ago that front month corn traded down to 392 or whatever, and we all just wanted to cry a little. Yep. And so I think that's super important to kind of recognize that we're back to a point of profitability, I don't even want to say that because I don't know if that's the case for a lot of folks. I know for new crop sales, it is for us. But for old crop and the catch-up sales, it's kind of one of those things that you have to kind of make that personal decision. When it comes down to it, though, I think breaking it up into increments is the best way to do it. So if you want to build confidence, take into consideration what you have to sell, split it up into 10%, 25%, 30% increments, depending on how far behind you are from where you need to be and what you need to do to generate cash, and be a willing seller as the market rallies and sell a piece at a time. Yeah.
And but most importantly, I shouldn't say most importantly, to me, if you've been waiting for something like this, don't ignore that it happened. Do something about it.
Yeah. Well, that's why I like having targets in ahead of time.
Yeah.
We were filling targets left and right today, both in wheat, 650 July wheat, 490 December, we got up to 489. So 485 December, $5 March. We had some bean orders filling, above 1250 on the July. Looking at Nove beans above 12, it's just one of those things where now is the time to be asking yourself where you wish you'd have been selling, and make sure that you're taking a little bit, like the old adage, that always floated around Twitter was taking a cookie off the plate when it's being passed around. And it's that sort of mindset that will save you from, being caught in not selling when the market, even if this market continues to move higher. If you're not selling today, that's fine, but where is the price that you're going to get engaged? And if you can't answer that, then, what are you doing?
Right. Come up with a plan. If you can't answer that, get an answer and know what it is. Let's go back to Twitter, okay, from @ToddAnalytics. What's your confidence level of 45Z sustainable aviation fuel guidance dropping soon to provide clarity for corn ethanol producers, corn farmers, especially since the latter may have to alter some farming practices? Well, it was what happened last week. It was for 22 and 23 crop. We don't even have guidance on 24 crop. and what it's going to take to get those 45Z credits. If they're going to do anything, they should have done it last fall to be timely. And we're talking about the Treasury understanding the timeline of farmers. I don't have any confidence. None.
No. I'm right there with you. And honestly, I've talked to a lot of folks in the energy industry. Like you've had Jordan Fife on here not long ago, I don't think. And he's one of the smartest people I know in the energy side of the business. And he has a lot of really great connections, that work within the sustainable airline fuel part of the energy sector. And a lot of them are just like, listen, the ethanol side of things is going to be very difficult to accomplish. The sustainable airline fuel is also one of those things. They keep telling me that we are focusing on the wrong prize. And I'm going to say if the folks behind, in the energy sector, and maybe they're just trying to discourage us, but I don't think they're going to come up with much that's going to help us for 24. And I think there's other programs that kind of provide a premium for participating in those types of farming practices. And that would be where my focus would be as a farmer.
Okay. Very good. I asked you, I gave you kind of a multiple choice earlier today. What's going to be the most important this week? Russian weather, South American weather, first official look at 24-25 marketing year from USDA, charts and the attitude of the funds, or other. What are your thoughts?
Oh, I think can you throw together the weather and the chart and the attitudes of the funds? Like,
sure.
I think those things, and I think, what dog wagging tail or tail wagging dog or however you want to look at it. Like, I think the weather and the issues that you're seeing, the Russian reports of Russian frost after worries over Russian production, and the biggest thing that I'm seeing right now to me that tells me that the concerns that we're seeing are valid is it's translating over into the cash market. So like Russian wheat offers right now have basically been pulled. Russian barley offers have been pulled. Like that tells me that there's something that's gone on that traders are like, hold up, we have to wait and assess this situation because we don't know what else we are going to have to sell. And so when you start to see those types of things happen, you're seeing that out of Rio Grande do Sul, that's when the uncertainty and the craziness takes place and the markets start to move, and so that's what we're seeing. Weather has caused these issues. It's triggered, some new longs coming into the market there the middle part of last week. That's created the market, getting pushed up to some important resistance levels that we've broke through. Now is time for the shorts to cover if they are, willing to listen to the market signals. And so it's really up to how deep the farmer selling becomes to offset the short covering. And if guys aren't rolling, if we're not seeing wheels that rolling and crops going into the ground actively this week, you're gonna be hard pressed to see, I think, a lot of folks be aggressive new crop sellers, even if they should be.
Yeah. How important is it that wheat's playing along with this?
Oh, it's huge. Wheat was the leader to the downside, and I think wheat's going to help be the leader to the upside. One of the things that we really kind of didn't take into consideration, or it wasn't talked about as often as it should have been last year, was how quickly wheat went back to the pre-run-up that we saw, the pre-inflation trade run-up, and simply how much feed wheat we had available. Because if you have wheat trading cheaper than corn or in line with it, and you have a lot of wheat that's trading at a discount, you're going to hurt corn demand, which is one of the things that we've done. This year now you're seeing wheat trade much higher than corn. It doesn't price into any rations. And so I think that's very helpful around the world when it comes to kind of increasing that corn for feed demand and some of these other things that we haven't seen for a while. And so wheat really needed to be the one to lead the way. And wheat gets a lot of abuse, and for me, it's tongue in cheek, mostly just because it can be such a crazy market to trade.
Well, it's fun to make fun of.
Yeah, it is. I mean, it's one of those markets where a lot of people don't know the ins and outs of it either. But, wheat really is the leader right now. Beans have their own story, of course, with meal and in the protein sector, but wheat is the leader in grains.
Okay. Are you seeing any signals from the cash market that you think we need to be aware of?
Yeah, I mentioned that about Russia. I think the fact that you're seeing the spreads strengthen as they are, today, this tells me that we're getting some signs of old crop demand, or at the very least, there's something happening in old crop that we should be paying attention to. Especially with the amount of old crop bushels on hand, like we should have seen, you would have thought we would have saw another round of big time farmer selling as we got up around 470 and it would have pushed us back. The fact that it didn't and we were able to close basically above Friday's highs, I believe. To me, that's a huge sign. And I think that, there's something happening with the old crop demand that I think may catch some folks off guard, or potentially we could just see, like I said, the U.S. can command a premium and we can be above the rest of the world when it comes to the offers that we make into the export pipeline because we're able to ship it right away and we have the best quality. And that means something. And I think that that's a sign, I think with the spread action that we're seeing, I think it's a sign that we could potentially be seeing some folks inquire about getting some ownership ahead of the summer.
Okay. Does a crop issue in the U.S. wheat belt does it matter? I don't mean to be flippant about it, but does it in the big picture? Does it really even matter?
In the big picture, well, yes. I mean, it always matters. I think that's one of the things where that's what's so beautiful about trading commodities is the butterfly effect is visible everywhere, right? So if if US supplies are lower depending on what they are, then one market out there, whatever market that may be that we export into, is going to be short. They're going to go elsewhere, But I think a U.S. problem on its own is more of a cash market issue. That's going to be more of a spread and a basis thing. U.S. problem combined with other problems, obviously, is going to be a big thing. But no matter what, a production issue in one part of the world does spill over into other parts for sure.
Okay, only a minute left. Left. Where do you want guys to have their head over the next 30 days?
Get your orders in and be engaged in your marketing. You should be looking at making sales here around these levels. These are great levels. These are opportunities to get started. And then work to incrementally sell your crop every 30 cents on corn, 50 cents on beans if you need to. Break it up into increments. Scale sell as the market moves higher. Don't wait to make the decision until it's too late. And make sure you're booking a profit this year when you can.
Perfect. Are you going to start selling ice cream?
No, but we are having an ice cream truck at the June meeting. When it's over, guys, everyone gets to walk out on their way.
Okay, June meeting. Give me some details real quick.
Right. June 19th in St. John's, Michigan. At the very end, you get ice cream. That's all you need to know.
That's all you need to know. Where can we go to learn more about it?
You can find us on consusag.net, or you can find it on Twitter. I'll share details there at Goddess of Grain.
Beautiful. Angie, thank you so much. Appreciate you, man.
Thank you.
All right. Angie Setzer, Consus.
The truth is hard to come by these days, unless you listen to AgriTalk.
I ain't as good as I once was. I got a few years on me.
Welcome back to AgriTalk. I'm your host, Chip Flory. Glad that you're with us. All right, it's Monday afternoon. We just wrapped up a great conversation. I thought it was a great conversation with guest Angie Setzer from Consus Ag Consulting. Now let's get a chart update. Cary Artac, Artac Advisory. How you doing, Cary?
I'm doing great, Chip. Thanks for having me again.
You bet. Glad you're here. Don't forget, you can go to artacadvisory.com. That's ARTAC advisory.com. Get signed up for a 2-week free trial of Cary's daily service. All right, buddy, get us started. Where are we going?
July corn. Late last week, we had a 2 to 3 week buy signal that has almost reached its objective in as many days. I mentioned this in the show last week, in the mid 470s, now lower 470s. We closed today 469 even. 473 and 3/4 is a weekly chart, weekly continuation chart that is the string together of previous high volume contracts, goes back almost a year. It is a channel top that can absorb buying not only through May, but possibly through summer trade. We do need to get up and over 473 and 3/4, close above it at the end of this week to set off what I would call like, our summer rally into July, a 2 to 3 month move that should then yield 578 and a quarter, which is the next kind of 2-year channel top. So closing above the 473 and 3/4 1-year channel top, we've got a 2 to 3 month rally to the 2-year channel top at 578 and a quarter. That should play out within 2 to 3 months where we could top out possibly through the rest of the year. But none of that is likely. I don't see any of that happening unless we can close above 473 and 3/4. Until then, this is an area to sell as we move through May and into summer trade. Below 473 and 3/4, we can fall back to 440 even over the next 2 to 3 weeks, possibly all the way back to that February low what was the lead contract? I think it was the March contract, put out a 404 and 3/4 low. That is the low on the weekly chart for the year itself. 440 on the way down, I think, is a realistic 2 to 3 week target now. Now, there's no sign of selling at this point in time. We have yet to actually test 473 and 3/4. I think 470 was today's high. So for the next day or two, we could test this area. And if we fall away into later week, wouldn't surprise me. 440 even in reach within 2 to 3 weeks. Closing below 440 even is the clear indication for that 404 and 3/4 within another 3 to 5 weeks. So I can't say it enough. 473 and 3/4, significant pivot point as we move through the rest of the summer. On to July soybeans. July soybeans actually today put out a meaningful buy signal. It's only good for about 2 to 3 weeks. I mean, volatility has certainly spiked. We've got a vertical move going on right now. 1214 even is the big floor now, near term only. We closed today at 1248 and 3/4. So we could ease back to 1214 even, perhaps over the next week or so. It is a buy opportunity for the next 2 to 3 weeks where I expect 12.90 12.90 is a 3-year channel bottom we settled below in early January that set off a long-term sell signal. Now that sell signal isn't in play anymore, but 12.90 is still a significant ceiling of resistance that may well contain buying not only through summer but even into later year. 12.90 is a big area to sell into if you're interested in hedging as we move through summer. And inversely, if we can close above 12.90, then I see a real rally on our hands. 2 to 3 month rally to 14 and a quarter if we can close over the next, say, few weeks above 12.90. On the way back down, if we close below 12.14 even, that buy signal is off. I would then expect 11.45 even within about 3 to 5 weeks, where we could actually bottom out into later summer and is a meaningful downward pivot point into later summer. And finally, July cotton, big sell signal about a week ago in this market, closing below a 1.5-year channel bottom that this week is at 80.20. That is our ceiling of resistance through summer. This thing can keep unwinding down to 70.21 over the next 2 to 3 months. That is the 2022 low. And I don't see a double bottom there. It doesn't look to me like it's likely to happen. I think this thing can go all the way back to possibly the 2020 low of 48.35 over the next full year of trade, holding below 80.20. Now, if we can close back above 80.20, that neutralizes that long-term sell signal, but I don't see a meaningful buy signal unless we can close above 83.15. 83.15 is our upward pivot point through summer. Closing above 83.15 July cotton, the mid-90s expected again within 3 to 5 months, but we're nowhere near that scenario right now. We are heavy through summer and even into later year below 80.20 July cotton. That's all I got, Chip.
Okay. All right, Cary, good stuff. Thank you so much, buddy. Appreciate it. Again, go to artacadvisory.com. We were talking earlier about we're right on that edge in corn. Follow-through buying could turn into something really big, and Cary just confirmed it with what he's looking at on the charts. Nickel higher could get us $1 more to the upside, or sell it now for a move down to 440. It's we are right on the edge in this corn market and trying to figure out exactly where we go from here. Okay, first things first. Yeah. Take a look at that radar. We've got either tornado watches or thunderstorm watches from southwest North Dakota down to north central Texas. Yep. It's all over the place right now. There are some severe thunderstorms that have developed in northern Kansas, central Kansas, just east of Dodge City. So, boy, heads up. This could be a very active afternoon and evening weather-wise. Now, when we jump out to the 6 to 10-day outlook, this is for May 12th through the 16th. The above normal temperatures moving back into the Midwest. Wisconsin, Iowa, most of Kansas, and points to the west of that are looking at above normal temperatures, near normal temperatures through the rest of the Corn Belt, including most of Missouri, Illinois, and Indiana. Near normal precipitation also expected over most of the Corn Belt. 8 to 14 day. This is for May 14th through the 20th. The above normal temperatures are expected to extend to east of the Mississippi River, get over into eastern Illinois. Above normal precipitation expected over the entire Corn Belt. Grow Getters.
Here,
the
here.
first of its kind drops tomorrow.
That's right,
Where?
Grow Getters. It's going to be awesome. Terrific new podcast on YouTube, baby. Go.
There you go. There you go. Excellent. All right. And it's featuring the one and only.
Mm-hmm.
Yes. AgriTalk news anchor, Davis
That's right.
Michelson. Come back tomorrow morning. We've got Jim Mintert here on AgriTalk.